In this video, guys, we're going to look at 5 key ideas when building a trading team. Stay tuned. Hey guys, so 5 key ideas for you when you're building a trading team. In other words, you've got a group of guys or girls who are all trading. When I say guys, by the way, you know what I mean, male and female. The team is the similar type of style and strategy to you. It's similar type of experience to you. Maybe you've got someone who's a bit more experienced, but whatever the case may be, you've got a group of people who are trading and they are committed to helping each other succeed better. Now, the biggest thing is obviously accountability. And so the first thing, which we've really got to talk about, because that's the whole point of this, is that make a commitment and be held accountable. So every time you're meeting, and this could be virtual as well, guys, you could be kind of have one of those virtual Zoom calls or whatever it may be, Google Hangout, Skype, whatever. The point is, and I definitely encourage to share faces as well, because you want to have as much engagement as possible. If it can do face-to-face, then great, and you should probably at least arrange one face-to-face, obviously depending on the distance, but at least one face-to-face a year minimum, even if you're miles away, and kind of much less frequent, or more frequent should I say, if you're closer. But that's by the by. The point is, you make a commitment to be held accountable. So let's say there's 5 of you in this group. Each one of you makes a commitment about what you're going to do before the next meet, i.e. the next month. And then your job is to hold the others accountable to their commitment, and their job is to hold you accountable to your commitment. So it has to be measurable. It can't be like, oh, I want to do this and do that. It has to be measurable, i.e. I'm going to be journaling every day. I want to log my trades much more effectively. I'm not going to take a loser over X amount of thing. I'm not going to take more than this position size. I'm not going to trade more than 5 markets. I'm not going to trade more than 6 trades a day, whatever it may be. And then the important thing is to be held accountable, so that when you go in, you know that someone is definitely they're all going to say, right, okay, John, now you said last month that you were going to do this. Can you show us that you've done this? Obviously be more friendly than that, but that's the point. So you're then going to stay there in front of the 5 guys or whatever and say, well, yes, I have done it. Here's the proof. Great. Well done. Pat on the back. What are you going to do next month? Oh, no, I haven't done it. Okay. Why didn't you do it? What went wrong? Let's look into it. Let's try and work out why you're not sticking to your plan and your discipline. And the same when you go around and do that. That's the kind of the whole point of it. There is something to be said for people sharing trading ideas, which is to me different, but I think this is more of an accountability trading team as opposed to an idea sharing team. That's another thing, and perhaps another separate video. We talk about topics that you could do to share, to take trades, but this is more people helping each other, and they've got their perhaps individual styles and own methods and strategies, etc. Number 2, sensitive one potentially, but share P&L. It pays to be open with these guys, and obviously you can say, listen, confidentiality here. Someone may be trading, a couple of £1 million account. Someone may be trading a £5,000 account. That doesn't matter so much, rather than the commitment of the trader to get better. Because it doesn't matter how much is in someone's trading account, really, it's the commitment and how serious they're taking it. And if they're taking it seriously, they've only got a small amount in the account, and that's way better than someone who's got a couple of £1 million in the account and is just throwing stuff around and is gambling. Rather not have them in the group. So don't focus so much on money, more focus on commitment and desire to become a better trader. So anyway, the point is, share P&Ls and say, hey, listen, this is what I'd like to achieve in it. It's achievable based on my strategy and the risk reward ratio, and be comfortable sharing that kind of stuff. Because often with traders, we think, oh, you know what, we don't want to say this or say that. Maybe they'll feel, that you're trading too big or you're trading too small or whatever. Get out in the open and say, this is what I'm trading, this is my kind of account size, and this is what I'm looking for, and this is my P&L for the period that you're trying to analyze. And then it becomes much easier to become accountable, much easier to be open, and it just opens up things a lot easier and becomes more valuable, in my opinion. Number 3, swap performance sheets. So a performance sheet, again, this is something you can choose to do or not, but a performance sheet will be something at the end of the day or the end of the week or whatever you do with your swing trader or day trader is, okay, I'm going to analyze, how will I perform? What was my mood? How well did I judge the market? How well was my execution? How well was my concentration, my focus, my preparation? All the things that matter to you, all those metrics, and allocate them, however you want to do that, 1 to 10, or a color system. It doesn't matter. And then sharing that with others as a talking point. So, okay, let's have a look at, what did Jane get? Okay, Jane. Okay, you struggled a little bit with your focus, I noticed. Why was that? And then she might say, okay, because of this and this. Okay, so how can we all just come up with ideas and ways for you to overcome that issue? And then someone might suggest something, someone might suggest something else, and then she might take away 1 or 2 bits and helps. And the next time, hey, my focus improved. That worked really, really well. Thanks, Jim, or whatever. You get the whole point. All right, so the 4th thing is agree and stick to regular meets and stay on topic. If you are doing this and you're agreeing to regular meets, stick to them. Don't push them because you think there's something else on, or push them because there's some sort of wild active market going on. Agree to it. If you don't want to do it in market hours, then do it normal other hours, out of hours. But stick to it, because the improvement you'll see will outweigh any trades that you can make. And stay on topic. So I know it's tempting when you're in the meet, maybe you're meeting in a bar or a restaurant or whatever, or an office, and you start talking about, oh, did you see what DAX did? Did you see what Tesla's did? Have you seen this? Have you seen that? And you start to look at everything and you start to go off track, and you're not there to do that. You'll, by all means, allocate time for that. But then when the proper time comes, say, right, stay on topic now. The topic is, we've got a list of what we're going to talk about. We're going to stick to that list and we're going to allocate time to it. So we're going to go through our accountability, we're going to go through maybe our P&L sharing, our report cards, going to go around, and make sure you've got enough time for everyone to get something out of it, and stick on topic, and also give people time limits to talk about. So there's very specific, right, you've got 20 minutes to talk about this, blah, 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 etc. And the final thing is number 5, don't splinter off. What I mean by this is, it's common for you to perhaps build up more of a rapport with 1 or 2 of the others. And it's common then to maybe call and talk about trading on a 1-to-1 basis. Now that's fine, but I think you should keep it as a group, because the whole point is that other people are getting value from you as you're getting value from them. You're helping those other guys with your experiences and ideas, and they're helping you. If you start to splinter off and to have little private conversations about bits and pieces here and there, then other people are missing out on that potential knowledge and potential expertise and experience. So try not to, I know human nature, we want to kind of go to the people that we have the most affinity with, but try to stick with it. And if someone's not working well in the group, be open enough to say, hey, it's not working out for whatever reason, and move them on and get someone else in if you need to do that. Or if you're going to bring someone in, make sure everyone agrees with it. I think the power of the group is far more than the individual 1-to-1, because also don't forget, if you're getting 1-to-1 advice, that's great, but you may miss out on something that someone else says that just gives you a little bit of a extra impact to change something that makes a significant difference. So I definitely recommend kind of trying to stick it into the group if you can, or keep it into the group if you can. So guys, there's 5 key ideas when building a trading team. If you've got any, stick in the comment section below, and I'll see you next one. Take care. Bye bye.